Just one more second. It's coming. There we go. Welcome, everyone. My name is Dr. Stephanie Gripney, and we are super excited. This is really chapter 2 of our relationship with Essex County Community Foundation. And for those of you who are new to the party, it's a really fun story because we had the good fortune to connect with Gilson Family Foundation and Peter Spina in Colorado and do a lot of fun things together, from Who's Who in Impact Investing to our fellowship to Colorado Impact Days. And then had the conversation to say, like, what would happen if we started collaborating with their other state that they support, which was Massachusetts. And we were like, that sounds great. And have you considered making unrestricted grants or strategic planning grants to community foundations to do their impact investing strategic plans? And little did we know, Stratton at Essex was having the same conversation with Peter, and just super grateful. We just need a lot more Gilson family foundations to step up, because there are 800 plus community foundations out there, and they all could use this type of support. So what we're going to talk about today is really the launch of chapter 2 of what we're doing. So today's our housing, financial innovation, and impact investing webinar. My name is Dr. Stephanie Gripney. I lead and founded Impact Finance Center. You can think of us really as an investor accelerator where we partner with community foundations, place-based foundations to do help with their education, develop their strategies for doing their impact investing strategies, and then help support them on that implementation side of it. And today we're happy to also add the Barr Foundation as an additional partner as we go on this journey. Today's webinar is really our kickoff webinar. We already had our arts and culture webinar last couple days ago, and that was an amazing webinar with amazing speakers. But today we thought we'd actually take a step back, and we will talk about housing a little bit, but we're going to talk a little bit about who we are and how we got here. So again, my name is Dr. Stephanie Gripney. I'm going to hand it over to Stratton Lloyd in just a second. We ask that you mute yourselves when you're not speaking so that we can reduce background noise, which I could feel that coming really quickly. So I'm going to mute all. And we also thank anybody who donated to us. We're a nonprofit at Impact Finance Center, so we're super grateful for even $5, $10, $20 is an amazing support that helps support this work. So thank you for that. And with that, we're going to talk just a little introduction with Impact Finance Center, and then I'm going to hand the microphone over to Stratton. And so who are we? We spun out of University of Colorado, so we're a nonprofit. And we get excited when we hear about that there's 800,000 millionaires in the state of Colorado, and there's over 1 million millionaires in the state of Massachusetts. There's thousands of foundations, there's billionaires, there's family offices and companies. And the core function that we do is provide non-conflicted investor education. So if you think about a conventional Mass Challenge or accelerator in Massachusetts, those accelerators identify, educate, and invest in an entrepreneur. And we're the mirror of that. We identify the individuals and organizations with resources, educate them, and activate them to invest in projects, nonprofits, small businesses, startups, funds, cooperatives. And I will say our vision and our holy grail is to create the easy button. We want everybody on this call, regardless of how many resources you have access to be able to say, I want to invest in housing in Essex. I want to invest in women of color small businesses. I want to invest in the creative economy. You should be able to just have an easy button and go on your retirement platform at a Schwab or Fidelity, whether it's your IRA or a 401k, and you should say, I want to invest in this type of thing. And in order for that to become possible, we at the place-based level have to work with Wall Street, and we have to aggregate $500 million of women of color small businesses up into a single product. That's the magic number. And so at Impact Finance Center, that's our vision of help create the easy button for all of us, regardless of our access to resources to be able to invest in our communities of place, interest, and identity. And the super exciting part about that is the work we piloted in Colorado and a couple of other states and places showed that that's absolutely possible. So you can think about it as housing. If there's $50 million of housing investments in Colorado and Massachusetts, then there should be 300 million in the region, which means not only would we pass that $500 million mark, we should have 2.5 billion. So it's super exciting that that dream is becoming more and more possible. And it's more and more possible because of the extraordinary leadership at the Essex County Community Foundation and the really visionary funders like the Barr Foundation and Gilson Family Foundation who support that work to see what's possible in place. So Stratton, you can share the screen or I can move your slides, whatever works for you.
Yeah, I'll let you move the slides to keep it easy if that's okay.
Absolutely.
But I'll give a quick intro before you jump on this slide, Steph. I'll just say real quickly, you can see why we've partnered with Impact Finance Center, because not only does Stephanie bring a ton of energy and enthusiasm to this space, but they're really a leader in helping organizations like ourselves to think about how to research and evaluate and explore how we can implement impact investing locally in our community. And so that's what their goal is. That's what their vision is and their passion. And so we're super lucky to have partnered with them over the last period of time to help us on that journey. And we are on a journey as a community foundation to explore what our role can be to inspire more place-based impact investing in Essex County. And I'll talk a little bit about what that means and how we define that and where we are on that journey. And any ways that folks can get involved. If there's any questions or comments or anything along the way, please drop them in the chat. We love for this to be as interactive and bi-directional as possible. And we're learning too. So any questions or comments you have are super helpful to us, and we'll try to address those as we go through this this presentation. Next slide. Just to level set for folks, like what we're talking about when we talk about place-based impact investing, because it gets very confusing. There's a lot of terminology and language out there, and we think of the investment continuum when we think about this. And on one side of it, you've got pure philanthropy, and these are grants that are given to organizations. And obviously, as a community foundation, as other philanthropists on the call, we do a lot of that, and we do a lot of sort of typical, grants to organizations, which is super important. As you move up that spectrum, all the way to the far right, you have traditional investing, and this is investing in stocks and bonds and mutual funds, and are really sort of maximizing the market return. And so, on one side you have grant maximizing the social impact, and the other side you have traditional investing, which is maximizing the market investment return. Then you've got things like social responsible investing and ESG investing. I know some of these terms are even being debated and batted around now, so don't take them too seriously, but you get the sense of what I mean by sort of some of these terms where you're blending now market rate returns with some social impact. And on the other left side, after grants, next to that, we have what we call venture investing. And this is really our systems change work. And for those that are familiar with the Essex County Community Foundation, you'll know that we have been working over the last 6 years to do a lot of sort of multi-year, multi-million dollar investments in inspiring collective action around the biggest issues in our region. And we really think of that as a form of venture investing, meaning that we're at the table, we're engaged, we have milestones, we have deliverables, we're very much involved. It's multi-year investments. It's more focused on the social impact, versus the investment impact, but it is a much more engaged methodology of philanthropy. And so what we're really exploring now is in the new bucket, which are sort of, have been called program related investments, or PRIs, or recoverable grants, or loan products that complement our grant work and complement our systems change work as a new way of deploying capital into the community to help the nonprofits and our community members realize their vision and goals, and to complement that grant making work that we're doing in the region. So really, when we talk about place-based impact investing, in our mind right now, we're really thinking about that program and thematic investment area that is aligned with our grant making and systems change work, and becomes another tool in our toolkit of the different forms of investment that we can do in the region, and really helps us unleash a whole bunch of other capital that is in the region and outside the region that can be deployed to, again, complement the grant making and community work and the systems change work that we're already doing in the community. So just to help sort of outline a little bit where we're thinking and how we're thinking about this as we go forward. Next slide. And so just as a quick context, we've been working on this, for over 12 months. We've partnered with Impact Finance Center, and consistent with our systems change methodology, we start with gathering the data. And so we've spent a lot of time working with Impact Finance Center to really understand the ecosystem of place-based impact investing today in Essex County. Next slide. And we define that ecosystem as we've gotten into the work and working with Impact Finance Center as, you have one side, which is the demand. And we did a philanthropic opportunity scan across 300 local social ventures to understand, is there demand for this type of place-based impact investing, supporting things like micro lending, affordable housing, environmental investments, arts and culture, investments as examples. And today we're talking about housing. Is there demand for this type of investment vehicle to support them in achieving their goals? On the other side, we looked at the supply. Is there potential for supply? Is there assets that are charitable assets in particular that are available both in the community or in the region or across the country that could be accessed to meet that demand? And we're still in the process of nurturing and learning about that supply side, and that's part of the conversation today. And then in the middle, is there intermediaries in an enabling environment that can match the supply with the demand? In the next slide, Steph. And what we found in this research is that, there's positive signals across all of these different areas. There's absolutely demand. There's a lot of demand, in particular in housing, and that's why we're talking about that today, with housing being one of the number one issues in the state of Massachusetts, and the need for flexible, rapid capital to help nonprofit and affordable builders move quickly. There's absolutely demand. There's some intermediaries. There's not a lot of intermediaries. In the space of housing, there are more intermediaries as community development corporations, and other local organizations that are doing affordable housing in the region. There's actually more of that. In some other areas that we may need to help invest in some of those intermediaries to enable some of that supply and demand to work. But in housing, absolutely. And on the investor side, we definitely have found an eagerness to learn and to be educated. And so that's really what we're talking about today, is how can we continue to educate this investor community so that they can come along this journey with us, and us too, as investors, potentially, to learn about how we can best meet this need and meet the need of the demand, and understand where our leverage can be most optimized. Next slide. And so we have embarked, having finished that data research over the last 12 months, we've embarked on a vision where we see ECCF as really playing a hub across Essex County to build and support an ecosystem that inspires funders and investors to increase the size of social investment pie in Essex County. So we know we do a lot of grant work. We've got a super philanthropic community doing a lot of grant work. We're doing some of the systems change work now, but there's this whole other sort of bulk of capital, charitable assets, that right now is not being deployed to complement the mission. It's being done to sort of increase market rate return and things like that, which is great and should continue to do that. But can a percentage of that be also allocated to align with the grant making that we're doing as a community? Is that a possibility? And so that's somewhere where we really want to play that hub role in helping to educate folks. And so the next slide, Steph, we've launched a sort of a strategy that we are calling Educate, Connect, and Invest. And the educate piece is really, how do we educate that entire ecosystem, both on the nonprofit side and the social venture side, as well as the investor side and the intermediary side? How do we continue to educate folks so that this ecosystem can be more vibrant? How can we connect sort of interested investors that may have an interest in doing something in their local community, but don't know where that is or how to get involved in that. How can we be a connector? We have a lot of that knowledge at the municipal and nonprofit and other levels and all of our systems change work. How can we continue to be a connector in that? And then finally, one thing that we're really exploring is how can we be even a possible, and we're not committed to this yet, we need to really understand this like you all on this call, is how can we be an investor? You know, what was that vehicle look like and how can we actually be an investor, again, to be aligned with our systems change work and our grant making work to maybe help other investors deploy their capital to best support the community and really to expand that pie, not only in the region, but even outside the region, get other people that may want to have access to some of these local investments, give them an enabling platform to do that work also and reach some of our communities that can certainly benefit, but are really hard to access if you're just a typical investor or you have charitable assets, you might not know how to do that. And so the next slide, Steph, sort of outlines a little bit how this, this work is going to start to happen. And some of this work is going to happen in parallel. It's not going to all happen at once. It's going to happen somewhat sequenced, somewhat in parallel, starting with the educate, working on the connect, and then thinking about the invest. But we have a series of webinar events that we're doing today. This is one of them. And then most importantly, and I'm sure we'll put this in the chat in a second, we have a series of in-person events for those of you that are in Massachusetts or that can come to Massachusetts. We'd love to have you join those in-person events that are going to be with Impact Finance Center, which are going to be a sort of an intensive, interactive, day of learning around really how can investors do this work in arts and culture and in housing. We have 2 different days, one focused on arts and culture, focused on studio space, workspace, commercial space and housing, as well as one just a pure on housing. So it'll be a much deeper dive. And we really want to get as many folks to participate in that. There's also going to be some case studies, some actual investor, some social ventures that will be participating in that. And there'll also be some experts that are doing this work across the country, participating in that day of learning to be there. So it'll be much more interactive and it's going to be really awesome networking. So I'm really excited to look forward to that for folks that are interested in finding other people interested in this type of work. And then finally, we'll have a day of learning for the social ventures also, where they can come. So if you're in participating or in a social venture, you can bring one of those social ventures to this or let us know about that also. So I think maybe we'll press pause there, Steph, a little bit because we've done a fair amount of talking. You've given sort of a great overview of sort of some of the high level opportunity in housing. And I've talked a little bit about what ECCF is doing. And then I want to share a case study, a specific case study too, but I'll press pause there now. I haven't been looking in the chat, but I don't know if anything has jumped up in the chat or anything that we want to talk about, right now, Steph, or should I jump into the case study?
I think we should ask, people can come off mute if they have a question, but what questions do you have for us right now about where we've been and where we're going? Any questions you have for us?
My question in the chat was just a little bit more granular, and apologies, Stratton and team, if I'm jumping too far ahead. So I don't know if this is going to be part of your case study or if you want to address this later. But I was just asking more specifically about how you're defining housing on the demand side, and if you're looking kind of exclusively at LIHTC funded affordable housing projects, or if that definition is broadened. You may not know that yet, but just curious how you're thinking about it.
It's a great question, Derek. And obviously you're steeped in sort of housing and real estate and that type of stuff, which is awesome. And I think right now that's still pretty open. We need to figure out our space. I think as far as our mission and the work that we're doing and trying to align that with our systems change work and with our grant work, it's probably leaning to the side of more affordable housing, and trying to support nonprofit builders and affordable builders that need that support to be able to, achieve their goals and realize their vision. I'd probably say that'd be our answer right now.
But it could also extend to like affordable home ownership, other definitions of affordability. I just wasn't sure if your definition of affordability was limited to LIHTC in some cases. Sorry,
not specifically, not at this point. I mean, we aren't doing actual investments at this point in that way, but absolutely focused on, I mean, I would assume that we would be aspiring to do things, and others on the call may have other ideas that also get into other mechanisms for home ownership and wealth generation and asset development over time too. So there'd be other sort of flavors of how we would look at different opportunities that might have some of those be more attractive than others. But we
Amy,
don't have an actual
that,
fund right now. Yeah, go ahead.
yeah, Amy, did Stratton just answer your question well enough in that they're still figuring out what their actual focus on housing is and where their lane is going to be?
Yes, totally answered. Thank you.
Fantastic.
And I
What
think a
other
lot of that's going to be
yeah.
learning from you all, what the priorities are and what people want to do. I mean, we are, I always like to say our customers, the community, and you all are the community. So it's trying to learn what you all want us to do and where our role can be most successful.
Nancy asked, what's the scale that you're hoping to raise? Any sense yet?
Yeah. So we, at this point, we haven't committed to raising a fund yet, or what we would do. And so we don't have a specific dollar amount of like a fund that we're trying to do at this point. I think as we go through this learning process, and we're on the front end of this learning process, and as we understand, again, as we further understand the demand, which I think is strong, and we better understand the supply, and what there's interest there, that gives us the opportunity to size something appropriate where we can create a fund that can do that work. Just to share sort of a high level brainstorm of what we would love to achieve. We would love, to, be able to, generate a fund in the $10 to $20 million size range over time that's focused on a variety of different priority areas, housing being one of those. But that could also include micro lending, where we already do a little bit of micro lending, and that's an area of expertise of ours. And maybe even in arts and culture, and sort of providing, some of the needs there, and the capital needs in the arts and culture and the creative economy, which is also an area of systems change expertise that we focused on. And then obviously with, some of the environmental needs for, the environmental transition of solar and weatherization and EV and other things, that creates other opportunities. But we're not committed to that, but that would be, that may be aspirational. That's Stratton speaking of aspirational, but I don't think that's crazy. I think there is the potential for that. And again, we'll be listening to our community to understand what the enthusiasm is. That we won't get there day one, but that might be an area where we can build over time to get to that size.
I will say, Stratton, it probably makes sense to have a listening session or a series of listening sessions, because there are a lot of amazing, thoughtful opinions on the chat of this type of housing versus that type of housing versus this type of housing. So, and Nancy Turner said, you can do a lot with 10 million, and there's a lot of potential for housing orgs. I could leverage that over and over again. Kathy said, are you still looking for social ventures to present at the pitch at the 522 event?
I think we definitely are. So, definitely reach out to me and let me know, if you have a good idea or are interested in anything like that, definitely let me know. And I think, Nancy's comment regarding, 10 million can go a long way, is a great sort of segue into a case study. Because I think what we're really talking about here is leverage, right? And, how can a small amount of flexible, friendly, lower cost, potentially, impact investing, enable organizations to access other resources and other capital that they couldn't get before. And that's really where the leverage comes from. So a case study, and I won't mention any names or anything like that, because there's a lot of examples like this. So I'm sort of giving an example of something, but that is very realistic and active. So in many circumstances, and for those that are in this industry, you guys have heard this story, but so I apologize, or this type of story. But in particularly in our communities, in our gateway cities, where we have a lot of sort of real estate, and a lot of it's been underinvested over time. but we're going through sort of some of the challenges of gentrification and some of the challenges of, real estate costs going up and housing costs going up, coupled with, where we are in time, which is one of the largest wealth transfers in history, which is happening right now in all of our communities, not just Essex County, but across the country. You do have now a lot of real estate that is starting to come onto the market, and you have owners that potentially have been, positive owners that have been providing affordable or, fair priced housing over time that are now looking to sell and exit. And so, a lot of times this type of thing happens pretty quickly. And so, in some circumstances, you might have 100 units that are coming for sale that have been 100 units of affordable housing that is now, it's been privately owned, but it's been, more or less affordable rent for folks to, have coming on the market. And so you have a seller that may have a sense of urgency. They may be altruistic and want to, sell to another buyer that can continue the legacy of the affordable and fair priced housing in that community. However, they also have a sense of urgency and need to get paid. They may need this funding for siblings or other ways, or need to get paid. And so you have these 100 units that come on the market. You may have a 6-month window, a 9-month window, and an organization that may have been cultivating this and is ready to actually want to do this work may not be in a position to move quickly or to have the money or to make the initial acquisition or to even sort of put down the down payment or even provide, design and development costs to actually be able to participate in that type of acquisition. And so in this scenario of 100 units, it might be $25 million that needs to be raised by this affordable housing provider, nonprofit provider, and it's going to provide 100 units, but they need to move quickly. And they need the money to be flexible and adaptive. And that doesn't mean that they can just go out to a traditional lender and get the money. It doesn't mean they can get government money, because government money takes a long time. That may be part of the exit plan over 3 years, 4 years, 5 years. And for those of you that are familiar with this type of acquisition, typically it's a really, really complicated capital stack, with government lending and traditional lending and other lending and grant money. And so to pull all of that together can take multiple years, but that's not what they have. They don't have that time to purchase those 100 units in that time, even if the seller is super nice and wants to do the right thing. That's just not reasonable. So in this scenario, as an example, the affordable buyer is looking for 5 to 10% of their money to come from, place-based impact investing, which would basically be friendly, flexible capital at a lower cost that enables them to make a move and to commit to purchasing this funding, put down a down payment, even enables them to get other access to other traditional capital that they might not have been able to get, and basically ends up acting as a bridge, either a short-term bridge for a year, but it could even be a 3 to 5 year bridge that enables them to access some of the other government, subsidized lending vehicles that are out there, or tax credits or other things like that over time. So this 5 or 10% of lending empowers the organization to actually make the acquisition, move quickly, pay the seller a fair price, and be able to then access all of this other funding over time, which is probably another $25 million over time to actually realize the project. And then the great thing about it is that then they're able to access this other capital over time, which then enables the initial investment from the place-based impact investor to actually exit. So there is an exit of a recapitalization that happens over time and enables an exit for that initial project. So that's an example of one, and there's many. Some are much smaller. It may be buying a piece of land for $500,000 to put up 20 units, but you need to put down that down payment in order to even make that purchase of $500,000. And then some are much bigger. But with this generational wealth transfer that's happening in our communities in particular, we're going to start to see hundreds and hundreds of units that are being transferred from older owners to new owners. And so the question is, as a community, are we ready to move quickly to enable those organizations to be able to be opportunistic and to capitalize on those opportunities? And with a small amount of money, as Nancy said, can we really leverage something much bigger? And so that's an example of a case study, an example of if we did have a fund or did create something over time where we would be ready to move quickly to take advantage of those opportunities over the next 3, 5, 10 years as those continue to happen. And as a community foundation, is that the role for us to play? That's what we're all figuring out. So I'll stop there. And again, if there are any questions or comments, people may have other case studies they want to share, or they may have other comments or questions on that. We'll open it up to any other commentary.
Yeah, and Stratton, after we do a round of questions, I'll share our case study that we're doing in housing in Colorado with the federal government.
I see Nancy's nodding her head in the chat, which I appreciate. Thank you, Nancy. Yeah.
What other questions do you have for that particular? Thank you, Nancy, for the +1. We'll do another one. The federal government called us, and this is true across the country, that state workers and federal workers don't have access to workforce housing. And so a lot of places where the U.S. Forest Service is located is in beautiful mountain areas that have expensive housing or little housing. And so they're looking for a systemic solution that they would be able to pilot in one geography and then use it over and over again. And so I'm going to share a little bit about how we're approaching this pilot, which is a national pilot for the Forest Service. And so the project is actually in the mountains of Colorado. It's called the Dillon Workforce Housing Project. And something that's interesting is there in the new farm bill, there was a provision made that allows the Forest Service to use their land, their administration lands, for housing. And so they're essentially coming to these projects with free housing, with free land, in exchange for providing some benefit housing, buildings that they would use for administration. And here's how we're approaching this. This is the White River National Forest. We need a ton of housing. The housing project we're looking at right now is to build about 162 to 177 rental units. And the reason we're sharing this case study with you, even though it's in Colorado, is just our approach. And this is the approach we're looking at taking with this. At this point in time, when we were brought in the project, there's a $15 million gap. And so when somebody brought up low income housing tax credits, basically when affordable housing developer or workforce housing developer is going to get their financing for a project, it's not simple like when you and I buy a house. They often have to bring multiple sources of debt or multiple sources of equity and multiple sources of grant funding to the table. And we're looking to try to simplify this process. And so one of the things we were curious about is there's a teeny little nonprofit that one of our team members, Wendy Turman, used to be the CFO of for 5 years. And it's called MCE Social Capital. And you can think of this as essentially, if you think about the CDFIs and nonprofit lenders and other intermediaries in Massachusetts, they're doing a really good job, but they need a lot more money to lend out. So what if instead of creating a competing fund, we focus on just raising them more money? And so think of it as like a democratized aggregator. And that's what MCE Social Capital does. They've gone out to private individuals with $5 million or more. There's a couple foundations, a couple family offices. And those people with $5 million or more donate a $1 million evergreen guarantee to the nonprofit. And they've now aggregated 146 $1 million evergreen guarantors. Now they do microfinance internationally to support women and children. So they go to the bank and they borrow $75 million or whatever the interest rate is. Say it's 5% interest. They lend that out. Let's say they default every year, last year at $146,000. If they go back to each guarantor and go, would you make a $1,000 donation? And then they say, and just a reminder, you need to give us 18 months before you can pull back your guarantee, and people stay in that program for 8 years. So imagine if we started pooling guarantees of local folks in Essex County, regionally and nationally, who care about this. What's super interesting, on a $15 million gap, if you had 5 $1 million guarantees every year for 10 years, those guarantees, which are essentially friends and family co-signing for other friends and family in Essex County, would be able to reduce the interest rate and close that gap by $15 million just by using guarantees. And what's great about a guarantee is you don't have to sell anything in your stock and bond portfolio. You just have to basically say, I am good for this. The other thing we're looking at is, what if we could aggregate low cost debt to close a $15 million gap? You would need 8 to 10 million of 1% debt for 10 years. And to close that via equity, we would need 16 million at 12%. And what's super interesting is MC Social Capital has a debt instrument called a community note. And we're also in conversations with an investment cooperative, which would provide essentially 9 to 11% equity for those terms. And so the question is, what role is the community foundation in terms of, do we just want to be a little careful and thoughtful about, one, do we have enough intermediaries? And if we do, then let's focus on actually raising them more capital to do what they need to do. If we don't have enough intermediaries, which Stratton was alluding to in Essex, we might need to increase that capacity or expand the existing capacity. Then there's expanding the capacity of those intermediaries, and then really working with them to get them the access to the capital they need so they can go do the lending through debt, equity, revenue-based financing, full spectrum capital that they need to do. So I'll stop there and see if any of you have ever heard of using private guarantees in that way. The exciting news about this approach, when I went to Denver, and we have very expensive housing, probably equivalent to Essex, I said, if we could bring you 11% equity, what would the debt have to be to do unlimited 100% AMI housing? And they said 4%. And if you just think about it yourself, most of us would be thrilled in our stock portfolios to get a 5 to 8% return, and we'd be thrilled to lend money to a friend at 2 to 4%. And when you think about it in those terms, it means that if we can find the easy button to allow folks to invest in Essex around housing, arts and culture, et cetera, we would potentially have enough money and be able to aggregate that at scale to do what we want to do. Stratton, did that make sense?
Yeah, it makes sense. And I love that you're sort of pushing the envelope for people to sort of get a sense of, the different varieties and flavors of what this could potentially look like, and to sort of hopefully be inspiring to people to say, how could I be a part of that? Or what could I do to be a part of that? Or who would I know that should maybe, be involved or be really interested in this or bring a lot of value to it? As a community foundation, we're always looking to be inclusive. And so, bringing in new expertise, new knowledge, new capability, new enthusiasm. We definitely encourage people. I know that in the chat, they put up some of the dates for the in-person workshops. We definitely, encourage folks to come to those, as well as to invite others that are in the community that would benefit from this sort of conversation and thought too, and can maybe help us think through how we go forward too. And I think the example that you had there with the Forest Service, which we obviously don't have quite the same challenge with Forest Service as Colorado has, but we have workforce challenges too, right? We have, where does workforce live? And, whether it's, seasonal tourism and workforce type things, or whether it's in some of our core cities and serving the key employers that we have in our community, and with the increasing cost of housing and living and et cetera, it's really difficult for a lot of folks to live. So it makes me think, oh, wow, well, what could our workforce solution be? It might be different than Forest Service. We may have to tap into different buckets of funding, but what could be a workforce solution? And maybe even companies would sort of want to get involved in something like that. So just get you thinking about different things on that. And I love the concept of the easy button. I think, someone asked before, like, what's our vision of a fund and I think we would love to get to a point where we could provide one mechanism, one vehicle as the easy button, if that makes sense. And that's sort of what we're working towards. But It's a journey and we're learning and we're being inclusive in that process because we feel like that's the best way to do it before we come to a final decision.
Yeah, and I'd like to add, I just ran the numbers really quick just for the state of Massachusetts. Fun fact, how many millionaires are in the state of Massachusetts? And so that's, with equity, including your house, there's 1.2 million millionaires in the state of Massachusetts. 1.2 million millionaires. And if you go up to 5 million or more, that's 87,000. So if we can go aggregate those 87,000, just a fraction of them, 500 of them, to do private guarantees and create private guarantees on equity on a balance sheet or revolving loan fund or to buy down interest, you have the money even in your backyard to make this happen. What other questions do you have for Stratton or me as we wind down? Thank you for joining us today. We're super excited about it.
I know I saw Peter on the call too. And I don't want to put Peter on the spot. If he's still on the call, he's been put on the spot before, so he's used to it. He's
Yes,
probably used to it.
thank you.
Are you still
No,
there,
hi.
Peter? Yeah, there you are.
Hi,
You're in the
I
box.
am. Yeah, hi, everybody. Thanks for setting this up. Happy to
wondering-
join. And
I was gonna
Yeah.
say, Peter, if you could say, we have some folks that represent foundations on the call and that represent other things, and if you could give a little bit of a sense of how, as a foundation investor, I mean, not only
Yep.
as someone that's helping us go through our journey, which we're super thankful for, but also more with your hat on as a foundation, and you think about your corpus, and you think about how you want to align that with some of your grant making and stuff, and
Yep.
how you guys are going about that, because you're a great model of a foundation that's testing it. You're learning as you go and you're testing it.
Absolutely.
But you are committed to the learning journey, and which is terrific.
Yes, and we're committed to really being kind of first money out the door in a lot of cases, kind of maybe a guinea pig in this process. I think, as Stephanie alluded to earlier, across the country, I think depending on the region you're in, some areas are maybe a little ahead of others. So we noticed, I live in Colorado. It's how I got connected with Steph, and we've really appreciated the partnership with Impact Finance Center. But I grew up in Massachusetts, and the foundation that I help represent is based in Massachusetts. Hence why we've connected with Stratton and Beth and teams at Essex County. So I see some differences in what goes on in Colorado versus Massachusetts. And so we've tried to bring a lot of that thinking around impact investing to our grantees in Massachusetts, where most of them reside. And it's been in a lot of different forms. Thanks to the help from Steph and her team, we've been, I think, very eager and excited to, push that envelope a little bit in the form of, support that's well beyond just our typical grant making. And that has been the typical PRIs, program-related investments, that Stratton talked about earlier. So pretty basic loans to those organizations that we help support. And in some cases, we've been talking for a few minutes about guarantee programs. We have dabbled in that a bit as well. And I think it's a great way, as has been talked about, to leave investments invested in our endowment and allow impact to happen to some of these organizations. I also just noticed, I think it was Derek who mentioned in the chat, talking about what banks are doing. So on my day job, I work for a big bank. So I'm very familiar that banks absolutely have desire and capabilities in this area. And I frankly think that they are a key player to helping fill some of the gaps that exist out there. So we try to fill some gaps through using philanthropic dollars. I think banks can fill gaps in other ways that I think somehow, a little bit trickle into that philanthropic world. And I've actually worked with a bank over in the western part of Massachusetts, where we put a guarantee program in place to help. And it is actually housing related on a smaller scale than we're talking about here, or than Steph's example, but I think still a good stepping stone in the right direction towards bigger things over time. So I'll stop there. I know I blabbed a little bit, but I really appreciate the opportunity to chat and love what Essex County is doing.
Peter, specifically, like, as you guys think about this, and I don't mean to put you on the spot, but as you think about, what percentage of your assets that you want to allocate towards PRI, either today or in the future, what are you guys thinking? And I know you're starting this journey, but I'm just curious how you're thinking about that.
Yeah, we have already put out the door quite a bit. The total number of investments is about between 15 and 20 to date. And dollar amount wise, and by the way, the idea of this is recycling the capital. So a number of those investments have come back to us, and we're able to thus recycle that capital and put out more investments. I funded a loan this morning, for instance. And we would say right now we're at between 5 and 10% of our endowment is focused on PRIs or some sort of impact investment. So we think it's a pretty significant amount, but we want to grow that. So we foresee it being even bigger someday soon.
Perfect. Thank you. Thank you for sharing.
You bet.
Any other comments or questions? I'm trying to purposely be quiet here so people can chime in if they need to. I know it's a big group, so it's always sort of daunting to raise your hand. One of the things as a community foundation, we talked about our vision a little bit. We really see this as a unique opportunity to create a regional model around place-based impact investing. There's definitely people doing this type of work, and there's foundations doing this type of work, but there's not as many, in particular in New England, that are doing sort of a regional model that is really focused on sort of, Essex County or Northeastern Massachusetts. So we're really trying to think about how do we create a vision and an operation that can, be regional and then also be multi-pronged, focused on a couple of different sectors and be a model that can be replicated by others. So I know we work with, Steph is pulling together sort of a group of community foundations from across the country. So we partnered with a group of them also to share learnings and to learn from them, and see if this regional model can really be something that can be replicated as we go over time. I think the other thing I'll just note is that when Peter said he's doing 15 to 20 investments, my initial response to that is, oh my goodness, that's a lot of work, So one of the things that we want to do too is to possibly be an intermediary between folks like Peter that doesn't want to manage 15 or 20 investments, wants to manage one investment, and then we become the intermediary that can then, with our relationships in the community, help to play that role to enable folks like the Gilson Foundation to successfully deploy their capital in different ways without creating a ton of work. So that's definitely something that we're thinking about and trying to create a model there that could possibly be helpful to folks. I think if there's no other questions, Steph, I'm fine finishing a few minutes early.
We are. Yeah, we
And,
thank everyone for coming. Reach out to the entire Essex team, Impact Finance Center. If you have any questions, if you're like, how do I get involved? I don't understand my role, or I'm not sure. If we don't have a clear, quick answer for you, we will make a clear, quick answer for you. So this is going to be a heavy lift, and it's going to take everybody to make this possible. So I think it's going to be exciting, and it's totally doable. What's exciting about the size of Essex is you are big enough and small enough to make this happen, which is a really beautiful size. So thank you, Stratton. Thank you both.
Awesome.
I just want to call out the Essex team, the Impact Finance Center team. There's a lot of work behind the scenes to pull off these webinars, the in-person workshops, all of our great speakers. So thank you everybody that's been doing that great work behind the scenes. And thank you, Stratton. Thank you, the rest of everyone else, for joining us today. If you signed up for this workshop, you will receive a recording. It will be put on our Impact Investing Institute pathway, and you'll be able to watch the recording from the Arts and Culture. I don't believe we're recording the in-person workshops, but there's opportunities for you to participate if you're an investor on the housing one, the Arts and Culture Creative Economies one, and then there's one for everybody on the social venture side. So we hope to see you in May, and thank you for joining us today.
Perfect. Thanks, everyone.